What's up, crypto fam? Today I'm going to teach you two super simple trading strategies that even a 10-year-old could understand. And they can make you serious money in cryptocurrency. Imagine you have a rubber band. When you stretch it really far, what happens? It snaps back, right? That's called mean reversion. Now imagine you're on a skateboard going down a hill. Once you start rolling, you keep going faster and faster until something stops you. That's called trend following. These two ideas can make you rich in crypto, Nitas, but only if you know when to use each one. I'm going to show you exactly when Bitcoin crashed 60% and smart traders made 84% profit in just 5 weeks. I'll also show you how one trader turned $1,000 into $5,250 by following Solana's trend. But first, smash that like button if you want to learn how to trade like a pro, and let's dive in. Okay, let's start with mean reversion. Think of it like this. Imagine crypto prices are like a dog on a leash walking with its owner. The dog, Price, might run ahead when it gets excited, or lag behind when it's scared. But eventually, the dog always comes back to walk beside its owner, the average price. Here's how it works. When Bitcoin crashes super hard and everyone is panicking, that's when mean reversion traders buy. When Ethereum pumps like crazy and everyone is going nuts, that's when they sell. They're basically buying when everyone else is scared and selling when everyone else is greedy. Look at this chart. In March 2020, Bitcoin crashed from $10,000 to $3,800 because everyone was freaking out about COVID. See that red line? That's the average price Bitcoin usually trades at. When the price went way below that red line, smart traders said, "This is silly. Bitcoin will come back up." And guess what? They were right. They bought at $3,800 when everyone was panicking. They sold at $7,000 when price came back to normal. That's 84% profit in just 5 weeks. Best crypto coins for mean reversion. Bitcoin, like the old reliable dog that always comes home. Ethereum, also very predictable when it goes too far up or down. Big coins like ADA, DOT, LINK. They're like well-trained dogs that don't stray too far. Now let's talk about trend following. This is the complete opposite. Think of it like riding a skateboard down a hill. Once you start going down, you pick up speed and keep going faster and faster. Trend followers jump on the skateboard after it's already moving fast. Here's the trend following mindset. If Bitcoin is going up and making new highs, jump on and ride it up. If Ethereum is going down and making new lows, stay away or ride it down. It's like being a copycat. You do what everyone else is doing, but you do it smart. Check this out. In July 2020, Ethereum broke above $240 and everyone started talking about this thing called DeFi. It's like banks, but on the computer. Smart trend followers said, "Hey, everyone's excited about this. Let's jump on the train." They bought at $280 when Ethereum broke above its old high. They sold at $380 when the excitement started to cool down. That's 36% profit in 6 weeks. EMA stands for Exponential Moving Average. Imagine you want to know your average score on a video game, but you care more about your recent games than the ones you played a long time ago. The EMA is a magic line that shows the average price of a coin but focuses more on recent days, so it reacts faster to changes. This helps traders see the true direction of the price without getting confused by little jumps, making it easier to know whether the price is going up or down. Imagine you're watching a race between two friends. One runs faster, the 20-day EMA, and one runs slower, the 50-day EMA. When the fast runner, 20-day EMA, catches up and passes the slower runner, 50-day EMA, that's called a golden cross. It's like a green light telling you, "Hey, the price is starting to go up quickly. Now's a good time to jump in." In the Ethereum example, that the 20-day EMA, fast runner, crossed above the 50-day EMA, slow runner, around $280. This told traders to buy Ethereum because the price was gaining speed and likely to go higher for a while. After buying, they held on while the price climbed to $380. Then they sold to make their profit. Think of the EMAs like traffic lights for prices. Golden cross equals green light to buy. When the fast line moves above the slow line, it means prices are climbing faster. But wait, here's an even crazier example. Remember Solana? It went from $40 to $210. Someone bought $1,000 worth at $40. They sold it for $5,000. $250 at $210. That's over 5 times their money in just 10 weeks. This happened because Solana was solving problems better than Ethereum, and everyone wanted to buy it. The trend followers rode that wave all the way up. Imagine the 21-day EMA as a magic line that shows us the average price of Solana over the last 21 days. But it pays more attention to the most recent days. It helps us see if the price is starting to go up or down. When the Solana price moves above the 21-day EMA, it tells us the price is starting to get stronger and could keep going higher. This is like a signal to say, hey, the price is picking up speed, now is a good time to buy. In our chart, Solana broke above the $40 resistance level, and the price stayed above the 21-day EMA, which showed that the upward trend had started. Traders saw this as a chance to get on the skateboard and ride the price wave up. This helped them catch a big jump in price and make a lot of profit when Solana's value soared over the next couple of months. So the 21-day EMA is like a helpful guide that tells you when the price is getting strong enough to buy and join the trend early, giving you a chance for bigger gains. Best crypto coins for trend following? Bitcoin. When it starts a bull run, it can go for months. Ethereum, especially during big upgrades. Smaller coins like SOL, MATIC, AVAX, these can go crazy when they get hot. Now let me be honest with you about both strategies. They're not perfect. Mean reversion. The good stuff. You buy when things are cheap, like getting a PlayStation on sale. You sell when things are expensive, like selling your Pokemon cards when they're super popular. It feels really good. You're being smart when everyone else is being dumb. You don't lose as much money because you're not chasing the expensive stuff, mean reversion. The bad stuff. You might be too early, like showing up to a party before anyone else. Sometimes the rubber band breaks and prices don't come back. You need perfect timing, like catching a ball while riding a bike. Look at this scary chart. In 2022, Bitcoin looked cheap at $35,000. Mean reversion traders thought this is perfect. Time to buy. But they were wrong. Bitcoin kept falling to $17,500. If you bought $1,000 at $35,000, you'd only have $500 left. Ouch! Why did this happen? Because the whole world was having money problems, not just Bitcoin. When the whole economy is sick, the rubber band strategy doesn't work. Trend following. The good stuff. You catch the biggest moves, like riding the biggest waves at the beach. Works on any time frame, from 1 day to 1 year. Less thinking required, just follow the crowd when they're going the right way. Your winners can get huge. Remember that 5x Solana trade? Trend following. The bad stuff. Lots of fake signals like false alarms that wake you up for no reason. You're always a little late, like joining a game after it already started. Choppy markets destroy you when prices go up, down really fast. It's emotionally hard, watching your profits disappear when trends end. Here's a secret. Smart traders don't wear a swimsuit in winter or a heavy coat in summer. They pick the right strategy for the market's weather when to use mean reversion, rubber band style. Choose this method when Bitcoin or another coin keeps bouncing between two prices like a ping pong ball. It works best if prices make really huge moves up or down quickly. If everyone is super nervous, really scared, or really excited, mean reversion helps find good buying and selling moments. In crypto winter, when prices are flat or stuck for months and nobody is excited, mean reversion often works well. When to use trend following, skateboard style. Grab this method when Bitcoin breaks above its old highest price and starts a new run, like jumping on a skateboard at the top of a ramp. Use it if there's exciting news, like a big company buying Bitcoin or launching something new. When cool new technology pops up like NFTs or DEFI and everyone talks about it, trend following can catch the big moves. In altcoin season, when lots of smaller coins get popular and shoot up, trend following can help you ride the wave. How to actually do this? Mean reversion. Tips: wait for really big price moves. Don't bother with tiny dips or jumps. Buy small chunks instead of putting in all your money at once, like eating pizza, one slice at a time. Decide in advance when you'll sell and stick to it. Always have a stop loss, a safety button so you can get out quickly if you're wrong. Trend. Following tips. Wait until you see confirmation. The price should be moving steadily, not just a lucky jump. Use trailing stops, a special safety rope that moves up with you so you lock in profits, but stay on the board until the ride is over. Don't risk too much money. While trends are exciting, they can end suddenly. If you miss the big rocket ship, the huge move, don't chase it. Be patient and wait for the next good run. Remember, pros switch strategies depending on the market. The best surfers pick the right board for the right wave. Before I wrap up, here are the most important rules that will save you from losing your lunch money. Rule 1. Never risk more than you can afford to lose. If losing $100 would ruin your week, only risk $20. Rule 2. Keep records. Write down what worked and what didn't, like a trading diary. Rule 3. Stay flexible. What worked last year might not work this year. Rule 4. Practice first. Use fake money to practice before using real money. Rule 5. Be patient. Good setups don't happen every day. Remember, both strategies can make you money, but only if you use them at the right time. It's like using an umbrella, super useful when it's raining, but pretty silly when it's sunny. Alright, crypto warriors, here's what I want you to remember. Mean reversion equals buy the fear, sell the greed, like the rubber band. Trend following equals ride the momentum, like the skateboard down a hill. Your homework this week. 1. Look at Bitcoin right now. Is it trending or ranging? 2. Pick one small coin and watch how it moves for a week. 3. Practice spotting these patterns on charts. Use TradingView. It's free. If this helped you understand crypto trading better, smash that like button and subscribe for more beginner-friendly content. Drop a comment and tell me, are you more of a rubber band trader or a skateboard trader? And remember, the crypto market is like a video game. You need to learn the rules before you can win. But once you do, the rewards can be amazing. See you in the next video, and until then, trade safe and stay curious.